Oh, hello everyone, and welcome to this evening's session for us, where we're going to be looking at primarily the US markets. Thank you so much for taking the time to join us. As always, it's myself, Anna, and David, who is sitting behind me. But as always, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, what are we going to do today? Let me just bring over the what the markets are up to at the moment. Oh, and to remind you, tomorrow is call it Armistice Day, Memorial Day. So some of the markets are going to be closed. In the States, I think it's just the bond market. I think stocks are still going to be, still going to be quoted. The Forex market, we've got a Forex session tomorrow. That is obviously going ahead, although I think France has got a public holiday as well. That's quite interesting, particularly with the bond market closing, because we've just had a 30-year bond auction, and things are not looking very happy in the bond market. As we all know, the inflation figures have come in over the last couple of days. We've had the PPI, we've had the CPI for the US, and they've all come in worse than expected. I think Biden himself has said that inflation is his #1 priority. Well, if that's his priority, then the Fed had better do something about it. There's also an issue with the Fed in the sense that something to be aware of, regardless of, even if you don't trade forex and commodities, and you are primarily focused on stocks. Jay Powell's tenure as chair is due up for reappraisal, if you like, and there is talk that he may not be reappointed. That's don't think he. I think he's there definitely until January, February. But there's all sorts of rumours flying around that he is going to be replaced, and if he is replaced, one of the strong candidates is a lady called Lael Brainard. Although, I mean, she's a lady, but I don't think it's really going to make that much difference in the makeup of the Fed, in whether it's it's going to be more hawkish than it has been to date, because it has very a dovish tone to it. What we mean by that is it will do whatever it takes to maintain low interest rates despite what's happening on the inflation front, just to keep the economy going, stock market going, etc., etc. But there's a lot going on underneath what is happening at the moment. So you just have to be aware of that. However, things aren't looking too fantastic today, as we can see. We can see the Dow's down 198, the S&P's down 32, the VIX it's not hugely, it's still under 20. 20 is a kind of cut-off point for the VIX. Once it gets over 20, market starts to get a little bit nervous. Let's have a look at the Nasdaq. The Nasdaq is down, not hugely. What's it down? Well, it's down 204, which is not a lot for the Nasdaq. Now, the Russell is the one that's most interesting, because those of you who've been coming along regularly will know that it's been in this massive consolidation. If I just shrink it there, here we are. It's been going on for months and months, and it actually has broken out quite dramatically. We've got this pullback today. The other bit of important news which has just come through on Financial Juice, and that is, if you recall, markets took a bit of a swoon recently on the potential default by, I think it's the biggest property company in China, Evergrande. It looks like they are officially bankrupt. And you say, well, what's that got to do with what's happening over here? And I'm just interested in the US stock market. It's because markets are all very intimately connected through the flow of money. There's money going backwards and forwards, cross borders, cross assets. And when you get a default of this magnitude, I mean, the numbers are truly, truly astonishing. It is going to impact everything. Is that actually going to happen now, or is the market going to keep to its kind of seasonal theme? And the seasonal theme is we are coming into the holiday season and what we call the traditional Santa rally. It's the end of the year. Markets like to end on a positive note. So, yes, we're seeing, some pullbacks, some corrections, but there seems to be this determination that, they want to keep this party going for as long as possible. It's almost as if they're saying, well, yeah, we know we know things are bad, but we just want to keep it going that little bit longer. It didn't happen in 2018, and it didn't happen in 2018 because at the Fed meeting in December, I think, did they raise interest rates? I think that's what it was. They suddenly raised interest rates, and the whole thing collapsed. But it actually came back really strongly at the end. Once the Christmas holiday was over, we wrote about it at the time. Massive buying came in just before the new year, and in fact it laid the foundation for the next leg up in this tremendous bull market that we are in at the moment. So what I'm trying to say is there's a lot going on in background. Look at the charts, be aware, there are all these factors, but also be aware of, as I said, the seasonality factor as well. Now, it could all be upended. The futures market was saying earlier on that interest rates were, if they were going to rise, July next year. So, as I said, it's just one of those interesting periods, certainly to be a trader. Now, what are we going to look at today is we're going to look at VPA signals and the importance of patience, because the VPA is a fantastic methodology. Those of you who use it already will know the elements, the principles of it. It's price action, volume, support and resistance, candles, candle patterns, and obviously time. Time we look at in multiple time frames. And the reason I bring it up because back in October 21st, I think it was, we did a post on Tesla. Tesla is obviously one of these. The stock has a fanatical following. Elon Musk has a fanatical following. Great, fantastic. Kudos to the guy for doing what he has done. But we looked at the chart, David and I, and we said, well, what do you think? And you can see this is today's catch up to that analysis. And essentially what we said in that analysis, we actually called it, the flags are, there are some warning flags on Tesla. It was the weekly chart that we were looking at, but also the daily chart. And it's because we looked at the candles and we looked at the volume. We also looked at the monthly chart, and what was happening didn't kind of square, because with VPA we are looking for anomalies. We are looking to see whether the price action that we are seeing on the chart is genuine, and the only way it can be genuine if it is supported by volume. And what we looked at, there had been, this is the period back in October, there'd been a volatility candle on this up bar with a lot of volume, but it was immediately followed by, you could say that as a shooting star. It was also a volatility candle, but look at the volume underneath it. It was massive. When you see something like that, it kind of, you think, oh my goodness, if you use, even if you didn't use volume, that candle in itself is telling you that their weakness has come in. But you have to be a little bit patient. And what happened was it did carry on. Now, the post went out in October. I got a ton of abuse, emails, comments. This is BS. It sucks, etc. I won't go on. The language was even worse than that, but hey, who cares? And perhaps what I should have said in the post, I didn't say that, is This is a warning. You just have to sort of say, hold on, let's see what happens. And the analogy we always use is, those of you who've taken our program on the Forex program, and also I think we mention it in the book as well, in the VPA book, it's a bit like an oil tanker. Tesla had the most amazing run up to the $1,000. You know, it came off this long consolidation around the volume point of control in the $700 range, as it were, and it really took off with, you know, great amount of volume, lots. It was really pumped up, as it were. When you stop an oil tanker and you want to reverse and you want to turn around, you always have momentum. It has momentum. You can't do it. You know, you can't turn it on a dime. You have to give it some time. So you just have to be a little bit patient. Look at this, also the slower time frames. And it was the monthly chart for Tesla, and I'll have a look at the monthly chart in a minute. It was going up and the volume was falling. And you say, well, hold on a minute. You know, that's not right. Because the other thing is, it was happening at a time where there's a lot of liquidity in the market. Now, sometimes you can say, if it's in the depth of summer when markets are sort of quiet, you think, oh, okay, fine. You know, you do have to put it into context, but it was happening at a time when, you know, the market is going, you know, full bore, as it were. So what has happened? So this is the catch up, and you can catch up with the analysis on my site, annacooling.com, and it explains in detail what we were looking at here. But really, the two kind of candles up here, we've got a couple of little spinning tops candles, where a spinning top is where you have a very small body and you have little sort of wicks to the top and the bottom, and it's an evening star. When they come at the top, we say it's an evening star, and the chances are there's a very good possibility that it is going to reverse. And if it's accompanied with a reasonable amount of volume, that isn't going anywhere. There's a lot of effort going in, but it's, you know, there's not much result from there. Then we had Elon announcing, I think at the weekend, that, you know, asking for a poll as whether he should sell a bunch of his shares, because there's talk in the States that you're now going to be taxed on unrealized gains, which would be, you know, it's a bit of it'd be quite a dramatic change from the way, you know, business is conducted. So you've got paper profits and you're not going to be taxed on them. Anyway, that's for them to decide. What's interesting, I believe his brother also has sold 109 million of stock, but you had this gap down, and then yesterday we had this massive down candle. But what I also said in this analysis is, you have to have corrections and pullbacks. It's part of the nature of, you know, of stocks, because if you don't have correction, you know, they do fulfill a function. They fulfill a function in as much that it allows for re-entries, it allows for profit taking. You know, what we're looking at on a chart is the collective, if you like, opinion of millions and millions and millions of traders and investors, and each one of those people has a view. So someone who perhaps, you know, invested down here or bought here at 700 was saying, oh, well, you know, it got to 9 and my goodness, it's got to 1,000, which was about there. The round numbers are very powerful. They're magnetic. So is it surprising that maybe it got to 1,000 and you were down there saying, oh, it's had a really good run? The chances are that they did get out profit taking and it went up another $200. Well, that's just that you just have to suck it up, basically. The people I feel sorry for is the people who track it, who may be, you know, wanting to jump in, don't understand the significance of the candles that they're looking at, particularly with these sort of shooting star. And also we've got the support and resistance levels as well. And they jump in on the fear of missing out on the FOMO, and then what happens, it then reverses. But what's happened today is the buyers have stepped in, as you would expect. partly because we're at, round numbers, because people, there might be traders and fund managers, investors say, well, okay, well, I've missed that, but I'm going to wait until it comes down to a level that I feel comfortable with. And really, the whether this is a genuine, we've had the correction, whether this now climb higher is now the, this is just simply a minor blip. This is the primary trend, this is your secondary trend, and that's just simply, oh well, it's just what happened because of what he said, and etc., based on it's both, this is the combination of the technical picture and what's been happening in the background, as it were. You say, well, okay, is that actually going to reverse from there? Well, the only way we will know is whether that's genuine or not, and we have to look at today's volume and also what happens tomorrow. So if you are looking at looking for stocks either to trade or invest or anything, it doesn't matter whether it can be anything, because this is applicable, and you see these strong signals, you do have to allow time for them to develop, and you will get an overrun. And obviously on a slower time frame, it will be it will take longer, because we're going to have a look at Ford now, because on Ford is really interesting, because it's not least because the stock price went down to $4 at one point, and we had a similar situation but on a faster time frame. And I just want to show you how, obviously it's going to play out much more quickly on a faster time frame. The other way of looking at whether this is a, the re-entry on the pullback, you want to go back in after the pullback, the correction, is you have to go down to the faster time frames and to see what levels you've got. Because again, levels usually at round numbers, at significant points on the charts on different time frames. And I actually went down to the 10-minute chart just to see where this is where this is pausing, is this move, you can see on the daily chart where there's been some buying coming in. Is that going to hold, or is that just going to collapse? And what's interesting about the 10-minute chart is obviously the buying came in, and it came in just at, again, about the 900, 990, just under 1,000. Again, significant numbers. There would be automatic buy orders there, because everyone looks at a chart and think, yeah, it's great. You have to, so even fanatical supporters of Tesla really do have to understand that corrections and pullbacks are actually opportunities, not just for Tesla, but for all stocks, assuming that the VPA stacks up, as it were. So anyway, this is what we had today. Obviously, it's been falling heavily. You've got a really nice deep hammer candle. It was a volatility. It was, good volume underneath it. Took it up. Hasn't really gone very far, but what's interesting, it took it through this resistance at 1,060. It's now really in the kind of channel. Couldn't get through this this Camarilla third level, which is quite a key level. On the 10-minute chart, these levels are calculated every day, so it's their fresh set of levels. It kind of rolled over. Volume really wasn't anything to write about, but it's at the volume point of control. So clearly this zone with the volume point of control there, which is just below, so you've got 1060, you've got this strong resistance, then you've got the VPOC itself, and then you've got 1040, which I suspect 1050 is, again, nice round numbers. Everybody likes round numbers. So this is going, I think this is the key level. If it can't get through this, because the volume is not there, then what is the low? You're looking at 900. Now on a longer term time scale, if we go back to the daily, because somebody on my Twitter feed said, well, I'd be looking to get in if if we could get back down to 800, I'd be interested in buying again. And we look down here. He's interested in about here. He's looked at his chart. This is where it kind of broke out the last time, but the volume point of control is all the way back down to 700. So it has the potential to retrace all of this move down to. I'm not saying it will, I'm just saying these are the levels. So corrections and pullbacks are not all bad, they are opportunities. Right, that's what I've got to say there. Is there anything you want to say about Tesla, David? Oh, just a bit of news that's come in. Apparently, China Evergrande has met the Wednesday payment deadline for one of the bonds. So, phew, we really have got to keep, as I said, really got to keep this party going for a little bit longer. Right, just go back here, because I said that the other one I was looking at, I won't go through FinViz today because I think I'm going to pay for FinViz. The only thing I was playing around with FinViz is on the screener. This is, oh, by the way, this is Riot, talking about, just going off at a tangent slightly, obviously with all this fear going on in the market, the gold has kind of been up and down. It's not, but of course the asset that has kind of outperformed everything is Bitcoin, and I can understand why people are kind of seeing it as an inflation hedge. Now, if you're not in cryptos in any way, as always, it's the old idea of, remember the gold, the original gold rush when they were digging it out of the ground. The people who made a lot of money were the people who supplied the picks and shovels, not necessarily the miners. And Riot, I believe, is a Bitcoin. I think they're miners, as it were. And I quite like the look of this chart. The look of this chart is quite interesting, because if you go back to the monthly, it's gone from 206, went all the way down to practically nothing, and is now, it's really, this is I know this is a volatility candle. It's trading within the range of this volatility candle, but it just looks interesting, and it's one of these I'm going to keep an eye on it just to see how it performs vis-a-vis Bitcoin, basically. Right, just going to go quickly home, and let me just put the screener on. And let's have a look. Average volume over 1 million. Relative volume, I did actually move it to 2 rather than 1 because I just wanted bigger numbers down here. But I need to sort this out on FinViz because I'm not entirely happy with it. But you can actually sort on patterns, but also on candlesticks. Long lower shadows, long upper shadows. I've had a quick look at them. They're not brilliant. Some of them, for example, the spinning white top, I wouldn't, it's not my definition of them. But the long upper shadow, which is the shooting star, if you see what actually comes up, let's have a look. Is it coming up? Yes. Oh gosh, more have come up than they did before. Let's have a look. Let's have a look. Yes. I'm not, as I said, I wasn't over the moon with it, but I think if I pay for it and then I can go to my custom, I think it's going to be slightly better than it is at the moment. Right, Ford did actually come up when I did my original search on FinViz, and I've also got it up here on, because it was on shooting stars. And I also, if I can find, what was the cup and handle that I looked at as well? I'm sure it was Ford. I think it was Ford. We're going to look at more at patterns. Was it Ford? Okay. Right. Here we are, Ford on the day. Let's had a bit of a fall. Interesting on Ford, we're going to have, I'll show you on Market Beat. If you remember the process I've suggested is you look at FinViz, you do your searches based on the various parameters that you like to put together, and then put that into market beat and just get a really good background knowledge on what's happening, who's doing what, who's buying what, you know, is it very heavily shorted, what are the options, what's happening in the options market. Oh, and about the options market, to go back to Tesla, part of the ramp up in the stock is also being driven by retail options traders who just buy calls, That's it. They've got one, you know, they've got one strategy, and that is because, you know, this stock is going to the moon, and you know, it will try and get there, but it will have a correction. Right, here we are. Where are we? 3 minutes. Nope, I can't find it. I'll tell you what, let me just sort myself out here with Ford, because, oh, sorry, I'm looking at the wrong one. This is the 3-minute chart. It's not the 3-minute chart, it was the 10-minute chart. Let's have a look. Yes, there's only a little, a little candle. It was this one here. This on the 10-minute chart. Not strictly speaking a shooting star candle, but you know, it's got a wick to the top of the candle. We had this little run up of 3 candles. We had falling volume on these 2 candles, pretty much similar size. We've got a wick to the bottom of that one, but the volume is lower. Then we have this third one, which, strictly speaking, I said not a shooting star, but it has got this wick with slightly more volume. When you've got higher volume and you've got this deep wick to the top, that is pretty much telling you there is a lot of weakness coming in. But it didn't take, you know, you don't have to wait a long time. Unlike the daily chart, it did actually lead to an immediate reversal. Not a lot of volume on that one, but certainly on this one. Then you look at where is it going to. You look at your support and resistance. You've got the S3, the third level of the Camarilla, which is always important. It actually came off the S1 there. Congested around the volume point of control. Now, what's interesting, if you look at these candles where they've got deep wicks and you think, oh, great, you know, a wick to the bottom of the candle, we know there's support coming in, we know there's buying coming in, but look, there's not really much going on underneath it. It doesn't do anything. Then we had a huge doji with a massive volume underneath it, and we have the next leg lower and this break from the VPOC. These are great candles where you have wicks to the top of the candles. The volume does fall away on that one, I accept, but you're at this level here and down it goes. And the question is now, well, how low is it going to go? And this is where we look at our multiple time frames. But this kind of approach, you look at the daily, you look at see what the daily's been up to, then you go into the faster time, you know, whatever combination of faster time frames you have, and you look at the levels, you look at the candles, you look at the patterns, and you judge it and you play it accordingly. And just to finish off with Ford, the interesting thing about it, as I said, to put it into market beat, is, just take that down, so here we are, Ford Motor Company. This market beat, again, I like because it summarizes everything together. And the thing that caught my eye was this. It was what we call the smart money. It was actually hedge funds, and I need to pull that up. That doesn't mean that, you know, hedge funds necessarily get things right all the time. The 13F filings are a requirement at the SEC. Investment companies, hedge funds, etc., even countries such as the central banks, such as the Swiss National Bank, they have to, if they have very large holdings in companies, they have to declare them once a quarter. So they call the 13F filings. And just by the by, you'll find one of the biggest holders of Apple stock is the Swiss National Bank, isn't it, David? They just buy. They have got so much exposure to the US stock market. It's unreal. Anyway, yes, so there we are. They are in They're in absolutely massive amount of positions in Ford. As I said, you know, having gone from, at one point, I think it fell to a low of $4. I mean, it's absolutely astonishing. Let's have a look. There we are. It always makes me die. You know, this massive money sort of rolls in. I mean, don't think, you know, you're one contract or two contracts or a little bit. You know, you do. You know, you're any worse than investment fund managers who have a ton of money to put into stocks. You know, they're no better than you and I at timing. You know, going into into the market. But if we go down to the monthly chart, let's have a look and close it up. Yes. I could spend more time on this chart, but this is literally where it got to. It got to $3. In fact, it got even lower. Okay, there we are. 179. I mean, can you imagine it? It's absolutely extraordinary. I would have said this latest you know, this move higher was certainly here. You know, the volume just you know, just screams at you. You say, yeah, fine. The two down, massive buying. You know, someone would have said, you know, this company, how many years has it been going? That's not to say, you know, it's going to be going on for another 100 years. But it's still it was a blue chip company, and that has really laid the foundation for where it is now. And here we have a little shooting star here. It did actually get an immediate reaction, but the volume kind of fell underneath it. It didn't, you know, it really didn't carry on higher, it didn't carry on lower, and this is where we are at the moment. And what we have to watch here is the volume here. This is on of course on a slower time frame. Is this going to, you know, carry on, as it were? And I don't know what the all-time, where are we? You know, we go all the way back. Where are we? Here we are, 23.36. You know, it's not massively you know, massively it's not $200-300. If you look at a Riot, it was, you know, $200 when it was on the IPO. Comes down to partly will Ford, you know, step up to the challenge that you know, the climate problems, electric vehicles, etc., etc. Is it going to take on Tesla? It's interesting, but from a VPA perspective, you know, just looking at these charts, you will recognize instantly, you know, what is genuine, what is not. But when you see a signal such as this one, you know, such as the shooting star, and don't forget 2-bar reversals are shooting stars. If you lay one on top of the other, that is also happens to be a shooting star. You have to give them time to play out, particularly on the slower time frames. Can I put over to you? Before I do, just very quickly, because we don't go, the indicators that you see on the charts, they are our own, the ones that David and I have developed for ourselves. They're from quantumtrading.com, and at the moment we have MT45, Ninjatrader, got TradingView and TradeStation. You can buy them individually, or you can buy them as a package. A lot of our users, they start with one and then they add to them, you know, as they go along. But if you do start with one, the one that we always suggest people start with is something like the volatility indicator. And then if you want to upgrade to anything, we always do give credit for whatever has been purchased. If you go for the package, then whenever we develop new indicators, they are automatically added to your package. So you just pay once for them. At the moment, I think, is there 13 of them, David? 13. Yeah, on the they're slightly different on all the packages, but certainly on something like Ninjatrader, it's about 13. We are adding more, particularly volume indicators. Yeah, TradingView's got about something like 18 or 19 for the full package, but when we develop more, they are automatically added to the package. Right. If you've got any questions, just put them in the chat box. I will see what else. I'm sure I had another one that I was searching out. I think it was a stock called CDE, but I'm going to pass over to David. I will keep a note of all that we've looked at today. Certainly Ford, we'll look at Riot, and we'll certainly keep an eye on Tesla from now on. I'll pass over.
Hi everyone, hopefully you can see my screen. I'm on Ninjatrader, just looking around behind me. Yep, that's come up, terrific. And hopefully you can hear me okay. There's lots going on, try and catch up with everything, cover everything. If we start with in the usual place, which is the multiple indices for the US markets. Bottom line is we've got some really nice trades going at the moment. Bottom line is on the YM daily. Middle is the NQ, and over on the right-hand side is the ES. So you've got S&P 500, NASDAQ 100, and Dow 30 basically covered in the futures. And the top line is the 5-minute equivalent of those particular markets. And as you can see, they are all, for once, moving in pretty much the same direction to the downside. Some really nice trades going on, pretty straightforward stuff here. Anna mentioned patience. Yeah, you've got to be patient, waiting for, we had a lot of congestion early doors. You always get this volatility at the start. This is the start of trading for us at 2:30 UK time. So prior to that, we are running Globex only, and do not for 1 minute imagine that you cannot trade Globex. We are very fortunate. We are in the Northern Hemisphere, therefore we have the best of both worlds. We can trade Globex in the morning and cash and Globex in the afternoon if we wish. You might not be so privileged, and you might have to sleep through certain periods of this busy time of the day. There's absolutely nothing wrong in trading Globex. It is perfectly valid. All you're seeing here is the fact that this volume down here is distorted by the fact that at 2:30 you get the in-Russia volume with the cash markets alongside. It happens every single day. But in terms of trading this volume, I can assure you it's perfectly demonstrable, perfectly tradable. And in many ways, in fact, if I pull this back, in many ways you will find the price action. Here we go. This is right. This is 8 o'clock, right? So we've got the London Open here of Forex. The price action here is, as you can see, I mean, it's self-evident. It is much less choppy. It is much less volatile. And it is much more, in my opinion, straightforward to trade than when both markets are running in parallel. Now, that's true to say from a price perspective. You can see it instantly from the sort of candles that you get. In terms of the moves, it's also true to say that you don't get such dramatic moves in the electronic market unless, of course, it's impacted overnight. For example, when the electronic's running and you get a major piece of news comes out of China, for example, then of course it will impact it dramatically and you will have savage moves. And the other point about that also is that bear in mind, if you're trading the electronic overnight, and when I talk about overnight, I'm talking about overnight our time in the UK, which may be during the day for you. A piece of Chinese data comes out, which is significant. It's going to impact the electronic market, and that market is going to absorb that news. And by the time it gets around to the US markets, it could well be 12 hours later, if not more. And so, people who argue that the electronic markets, you've only got to trade the cash in the electronic, well, I'm sorry, I don't agree with that at all. Anyway, I'll get off my soapbox, one of many. This is very straightforward trading at the moment. The trend monitor is bright red, it's bright red, it's bright red. There's nothing scary here. Volume supporting, getting some really nice efforts to rally. The market's trying to rally, tries to go up. When you see these sorts of things, if you're in a downtrend and you see these sorts of candles coming in, happy days, because the market's trying to rally. You saw some buying coming in. What happened? Nothing. It really tried to rally, wasn't really going anywhere. Tried to rally again, spreads narrowing, got a bit of price resistance overhead, fine. Down we go again. Down to more congestion. Are we going to go further? Well, it certainly still looks pretty weak. Trying to rally here, wick to the upper body, decent volume under there. Trying to go. What it's basically happening here is the market is not receptive to higher prices. So, you know, buyers coming in there, they are not forcing the market higher, and it's just going to collapse and move lower. And we get wicks, 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 wicks. We've got wicks all the way down on those 4 candles. Lovely. You know, really nice. Good volume supporting it. Looks as though we're going to get another wick here as well, just coming to the bottom of the VPOC on the 5-minute chart there. And you've got, you know, the similar sort of price action. This is on the NASDAQ 100. Similar sort of price action here. Not quite so demonstrable, in fact, in terms of wicks. Places to get in or places to, you know, if you missed out, just going back to, where are we up here? If you missed out on getting in, I don't know, you were waiting up here somewhere and you weren't quite sure, and maybe you saw this happen, you thought, I don't know, there's a platform of support here, maybe it is going to bounce off there, and it did a little bit, and then it reversed, and you think, okay, fine. Then you get down to here and you think, oh, I've missed the boat because we've, you know, missed all of this. Then you get one of these, you think, okay, fine, that's a re-entry. It's either, you know, if you've taken some profit, you can get back in here, or alternatively, it's a place to get in. Same down here, you know, if you're sitting down here looking at congestion, you've got to be patient, 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 wait for it to break, then look for some sort of signal, confirm with volume, lots of volume going in here, not going anywhere, it doesn't look terribly strong, down we go again, and off we go to the downside again. It really is, you know, nice stuff to be trading at the moment. And if I go over onto the multiple Renkos, which I've got here somewhere, that one I think, there we go. No, this is okay. Let's just pull this out. This is on multiple. I've got this on the YM, but it could be any. Again, this is just a really nice way to trade. This is with the Renko optimizer, and basically you can apply the Renko optimizer to any time frame you like. And what I've got here is 15 second, 30 second, and a minute, and that's replicated up here with the Renko optimizer. And what it does is it basically tells you the optimal setting for that this particular part of the day and for this particular instrument. So if I click on the 15 second, and it will actually tell me, I think we had it at 8 there. So yeah, we're still at 8. So we just click on that. Okay, so that hasn't changed. So basically this is 8 ticks because sorry, 8 points. We're on the YM here. So this is 8 points. So each of these bricks is worth 8 points. If you're trading the mini down, that's $5 a pop, so that's $40. Very nice, thank you very much, each of these bricks. And if you're trading the big Dow, it's $25 a point, so it's even nicer. So these are valuable bricks. There are nice, profitable bricks to be had. We've got the trend dots on here, which sit above, perfect. And we've got the trend monitor here, which sits below. And the two are just, we develop them to be sister indicators because the pivots, the trends indicator here will change first because it's very close to the price action. So the first thing you'll see is the trend dots. First of all, they move to the underside of the brick. Then they will start to change color. And then if it's going to carry on as it does, then it's going to roll over to the top again, go through the brick, in other words, roll to the top and keep on pressing down. Absolutely no change on the trend monitor. And that's the way we designed it, because the trend monitor takes a more considered view of price action, whereas the trends works very close to the price action. So they're just perfect complementary indicators. And the reason we use it with the time-based indicators is because obviously we can apply VPA down here at the bottom, and then we're trading off a Renko non-time-based chart at the top. And the beauty of trading on a non-time-based chart like a Renko or a tick chart is that you see momentum. You see the market speeding up and slowing down, because the Renko brick is set to 8 points. The speed with which those 8 points go through the market, in other words, when this brick is created, will depend on how quickly the market is moving. If it's moving fast, you'll get a lot of bricks. If it's moving slowly, you'll get few bricks. You never see that on a time-based chart. You never ever see momentum on a time-based chart because it is governed by time. So let's just go back to see where we are. A little bit of a pause point coming up. Let's just go over onto the multiple workspace for the indices. That one. There we go. Basically, I've got the NQ here, so we've come away from the YM, we're on the NQ. This is on 15 second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute down at the bottom here. Multiple time frames. Again, trend monitor bright red throughout. It's now starting to transition on the 15 second, and the workspace just encapsulates why it's so important to have multiple time frames and how trends develop from your fastest one. And what's happening here is we are starting to see a bullish trend develop. The trend monitor's transitioning through to bright blue. There's no change on one, but if this continues and becomes stronger, then we will see a change here. We will see this trend monitor change to a darker color in a transitional phase. In other words, it is saying, okay, yeah, I see this happening. I mean, this is a tradable move. There's absolutely nothing wrong from a scalping perspective. You're talking about 30, 40 points here. This is a significant move. Now what we're looking for, we had a volatility trigger here. We had a ton of volume coming in, and we're looking at potential reversal, which is what we're seeing. But we haven't as yet seen the trend monitor transition in color. But if this is going to be a meaningful change in trend, it will, and it will start to rotate through here, and then it will go into the 3 minute and ultimately down to the 5 minute and down to the 10 minute and the 15 minute and so on, right the way down. And the key is, and you can see here, we've got rising price and falling volume. So at the moment, this doesn't look like it's going very far. We've also got narrowing spreads. We've got wider spread, narrower spread, and narrower spread still. And you've got falling volume. Be interesting to see what happens. That is not particularly strong. We'll see what happens in the next couple of minutes. But this is what you have to do when you're trading. It is to focus your attention. The analogy we always use of a blinkered horse, it's focus your attention on what it is you're trying to do. Are you trying to scalp some pips in here or some points in here? Or are you down here on the 10-minute chart? Because if you're down here on the 10-minute chart, okay, you're seeing a bit of a pullback. We've got a wick, you might be able to see it, we've got a wick here develop. So we had the move to the downside. We've got a wick starting to develop here. I've got the volume turned off because I've got so much data here. I've got TradeStation down here running as well, and I've got TradingView over on the other side, absolutely ton and a half of data coming in. But basically, we are starting to see possibly develop of some buying coming in under here. You'd obviously have the volume coming in here live. But if you're on a 10-minute time frame, this may not be significant to you because you may be in this for the next 2, 3, 4 hours, whatever it may be, a couple of hours, maybe an hour or so. And all you're seeing here is potentially a minor correction. Your stop loss will be set much wider. You're not particularly interested. But for the scalping trader down here, he certainly is interested, or she is interested, because this is a tradable opportunity. We move back up to the volume point of control. How much further is this going to take us? We go up to the 1 minute. Are we going to go back all the way back up to the VPOC? Doesn't look like it, because again, we've got volume falling away here. So this is not looking terribly strong. What we want to see in a rising move of this kind of nature is this should be the other way around. So we should start off here somewhere and be going up this way. We're not, we're going the other way. So it's anomalous. Volume price analysis, it works on such simple principles. It really is about validation. Is what you're seeing valid, or is it anomalous? In other words, price and volume, are there in agreement or disagreement? And that applies whether you're looking at a single candle, a single piece of price action, or whether you are looking at multiple pieces of price action. And the beauty of it is that when you're in a trade and you can apply VPA in this way, it stops you getting shaken out of strong positions, because if you can analyze VPA and say to yourself, yeah, I can see the market's coming back against me, but I also see what the volume is doing, it just gives you that much more confidence. Yes, certainly the indicators will help. You can see the transitional color is starting to come in here now because we've got this development here. But if this rotates back into bearish again, then this will just fade away and it'll revert back to bright red again. And this is it's just the way we developed it, but you can also use VPA in exactly the same way. Let's just go around some of the other markets and see what's been going on. Gold. Okay. I'll pass you back in a minute. Just whiz around one or two other bits and pieces. Just to show you what's going on in gold. Gold, we write a lot about, we trade it, we're very bullish on it, been bullish on it for a long time. It's actually today, it was interesting around about US market open time, we had both gold and the dollar rising together, which is not a good sign. It's always a sign of an underlying issue in the market. This has since come off quite strongly. You may not be able to see it, but the wick goes right up to the top of the chart there. I think it hit something like 1870 something. It's now trading at 1850, which is fine. Good volume under there. Very volatile. We had a nice run up early morning and it's now come off. But the point I wanted to make about it, and we've been writing about it a lot, is this level here at 1840. This was an absolutely key level for gold because it tested it multiple times over the last few months, failed on every occasion. and now it appears as of today that it may be holding above that particular level. If it does, then that's extremely significant in terms of the longer term direction for gold. This is what actually happened. That was here we go. This is just getting into the US session. 1:30 here, news out, volatility, big move higher, another volatility candle, and then we've had the rollover back down to the volume point of control. Nevertheless, it has held above that $18.40 per ounce region, and that's also helping to drag silver up as well. Very quickly, just onto TradeStation. I just want to get that out of the way. Just onto TradeStation. One of the issues with, and again, I've got Tesla over here. Anna's been through that chart, but this was the big volatility trigger yesterday, and this is what we're seeing today. But one of the issues with trading stocks, it's very easy trading Forex, very straightforward, because you're only dealing with 28 pairs. Here you're dealing with 10, 15,000 instruments of all different sectors, all different sizes, etc. And it becomes more an issue of how to filter all that data. How do you do it? What do you focus on? And I have to say, TradeStation is very, very good in that respect. It has 3 aspects. You've got Market Scanner, I won't go through them all. It has Hot Lists, and it has Radar Screen. Radar Screen is live. Market Scanner and Hot Lists tend to be more in longer term, if you like. But one of the great things it has is something like this, for example. So you get, I want to look at who are the big movers on the day. So I've got this set to the dollar gainers on the day. You can see somewhere down here, Tesla here. Earlier on, it was up here somewhere because it was like 10, 11%. It's falling away all the time. But the beauty of this sort of setup is that you can scroll down, not only pick these off, and a lot of these obviously triggered by fundamental news, earnings results, whatever they may be, but you can go and have a look at them very quickly. You can scan through immensely fast, with a system like this, up and down. You can go and have a look, see what they're doing. Why is that one moving? What's moving it? And of course, you can also sort on volume and everything else. So it's just a very, you have to find these ways of managing the huge amount of data that you have to deal with. This is another aspect. This is Market Scanner. Again, I won't go through this, but I've got this set up on an RSI. Just click on that. Where are we? Let's get that out of the way. There we go. Oops, sorry. There we go. Edit, edit scan. There we go. This is set up on an RSI. Very simple. Stock value and what RSI setting do I want to have a look at? I want to have a look at all stocks which are greater than 50. So it just it just pulls all that data off. Huge amount of data again to sort through and have a look through and see what's going on. And it's just to make the point. I'm not promoting TradeStation particularly. I'm just saying that you have to find, like Anna has with FinViz, whatever it is, you've got to find. We used to use many years ago, we used to use ChartSmart, which is a very powerful package. We also use the UK version of Iconic, whose name escapes me for a minute. ChartSmart, which is another very good, very powerful one. Some of them are free, but a lot of them are paid, and it's really just finding something that actually works for you. Sorry? ShareScope was another one. That's also very good. And of course, it's finding which markets they cover the best. They don't cover all markets. Some of them are US, have a US bias, others have a UK bias, so on and so forth. Just go back onto the indices, and I'll pass back to Anna again. That's okay. There we go. Let me just pass back to Anna. Okay.
Fantastic. I think you can all see my screen. I'm sorry, I'm going to have to use this crosshair because this is actually, it was actually a minute chart. That's what I wanted to highlight. I got myself confused. This candle here. We're talking about shooting stars basically, and if you look down below, you can see the price action went up to the camera, the S1. It looks like a really nice strong signal. What's also interesting, if you look right at the bottom, this is our tick speed, tick speedometer, and what it does, it exactly that, it picks up the noise of the market, whether it's sort of things are speeding up. So when it's green, we know there's a lot of activity. Can you hear me? Participation. And then it sort of cycles, then it goes into amber, and when it's red, things really do quieten down. But what's interesting, you can see here, is the market is not, it doesn't move at a consistent pace, at a consistent rate. It is constantly dipping in and out of, when momentum comes in, as we go here, we're back into green, then it dies down. I mean, it's almost like a living, breathing organism, as it were. But the reason I picked this out was it was a really nice example of a shooting star, which actually did it did what it's supposed to do. The next candle was a down candle, but it then attempted to rally, and it rallied straight into the support and resistance that we have, that's marked by the Camarilla. Because the other element of all this is you've got the candles, you've got the volume, you have to read it together with, as I said, you can use yours however you like to mark your important support and resistance levels on your chart. Are you going to use Fibonacci? Are you going to use moving averages? Are you going to draw these lines yourself? We use horizontal, or do you like to use channel? Do you like a trend, diagonal channels? It's entirely up to you. We've always stuck with horizontal, price-based, and the ones that are down here from the volume point of control, these are volume-based as well, and we have found they work remarkably well. On the volume one, as you can see here, particularly when they coincide with a price-based one, price just does seem to reverse, as it has reversed down here as well. But this was this is one candle. I looked at it, hit that, went sideways. Volume tends to die down when it goes sideways, and then we actually start in this really, really nice waterfall. As you can see in the red, it doesn't start off, it's quite slow. We know it's red. There's not a lot going on. We've got two little up candles here, but look at the volume underneath it. Nothing to write home about. And then it really does pick up. Now at this point, you say, well, where is this going? And this is why it's having these support and resistance areas, zones marked somewhere on your chart. So it gives you an indication of where it is going to. And as I always say, the 3 and the 4 are the most important, although the 3 is probably more important than the 4. There is an element of Fibonacci in the Camarilla that we have done. Don't ask me to explain how we've come up with this particular version of Camarilla, but it just seems to work really, really well. And you can see here what happens then is you have this very big candle with a lot of volume underneath it, but it triggers the volatility. What that means is this piece of price action is outside the average true range for this instrument in this particular time frame. Now, what the volatility also does is it's a great indicator to warn you. It's another warning signal to tell you that the chances are the price is going to reverse into the spread of the candle, which it does. And volatility, they're also traps. If you imagine there are people watching this chart and they've seen the shooting star, they think, oh well, maybe I'll hold on, and then they see the price go back up again. Oh well, I don't think, let me just wait, and they wait and wait and wait and wait and wait, and then this happens, and they think, right, I'll get in. And what happens next? It stops. I lost my voice for a minute. If you didn't know that, if you didn't have the volatility candle, most traders would simply say, great, it's on a nice run down, off I go. But it's coming up to the S3, which it does. It goes sideways, then it attempts to break away. It's got a reasonable amount of volume under that one. It does break, but look at the next candle. The volume goes down. It's really not going very far. It goes back to, with the S3, you will find that price action just keeps testing it, keeps going back to it, will consolidate around it, will try and break. You'll also be looking at this in other time frames. This is just the minute chart, but it's just an interesting chart to use, the minute chart, to look at the candles, look at the volume, and just see as it develops, well, what's going to happen next? What's going to happen next? Look at the volume underneath the candles. Is that looks like does look like a nice candle, and it's going up, but look at that little candle there. It's anomalous, you know, and look at the volume underneath it. So you are also looking at the reverse. You're looking at the spread of the candle with the volume, but you also look at the volume and, you know, what the spread of the candle is, and when it is you know, it is just you are looking for these anomalies all the time. Back it goes to the S3, more volatility comes in, a lot of volume, and you can see the green. There's obviously there's a lot going on, as we can tell from this, and also from the tick speed. Eventually it does actually get away, but as I said, it goes back. Then we've got the fourth level to deal with, but you can see here that we do get a really nice break. Now this is the minute chart. I suspect, in fact I know, the VPOC would have been up here. This is dynamic, this moves all the time, so this gives us the bands, if you like, the upper limit and the lower limit of volume-based support and resistance coming off the volume point of control. And what's happening here, we've had a little bit of basing at the bottom. It's now trying to get through the volume point of control itself. That also acts as very strong support and resistance. And where is it, you know, if you can manage to crawl through all this, get through all this price-based resistance, well, it's going to look to retest up here. Then you've got the S4 and then all the way to the S3. But as I said, these values, they're calculated every day, so I think I don't think that's going to happen by the end of today. But the hourly values that come with the volume point of control, the Camarilla, if I just go to 60, let's put some more data in. You really need to see them in conjunction with the levels that are on the hourly chart. These levels that are posted on the hourly chart, the Camarilla levels, they are valid for the rest of the week. So oftentimes when you'll find the price action simply stops on the minute chart and you think, oh my goodness, oh well, all the time frames up to, but not including the 60-minute, and you think, oh goodness, it's just stopped there. It's because it has hit a key level based on the hourly chart. And in fact, we've had the break from a combination of the R3 and the volume point of control. So it's no surprising. It's really struggling on the minute chart if you look at the hourly, because the levels that you have on slower time frames they trump. They take precedence, as it were. Right, what's happening over here? Evergrande pays past due interest date on 3 bonds. It looks like Evergrande has been scrabbling down the back of the sofa, hasn't it, really, to see whether it can put together enough money to pay the interest on its loans, basically. Right, everything. Can I pass over to you, David? Is that okay? Okay, I'll just pass you back to David. We're back tomorrow morning early. Was it 7:45? Okay, 7:45, and we'll be looking at the Forex market. I was actually going to mention one other thing. For those of you who don't refer to the Forex market very often, the one currency which is always worth keeping an eye on is the Japanese yen. Japanese yen is both a risk on and a risk off currency, and often the yen pairs, they kind of lead. So when the Japanese yen is being sold, it's considered market's supposed to be in a positive mood, but that doesn't always happen because the Japanese yen is selling off and the market is also selling off. And that what tends to happen is the market then catches up, and it's been happening quite a lot lately. So something to be aware of, and we'll certainly cover it in more detail in another session. Is that okay, David? I mean, the pair that used to correlate very strongly with the S&P 500 was the euro yen, but that hasn't really happened for some considerable time. But just generally, the yen as a currency, as a gauge of sentiment for the market. So I'm going to say goodbye. I'll pass over to David, and I know some of you join us tomorrow morning for the Forex session, and it should be great fun. And we'll see you then.
Hi everyone, welcome back again. Just see where we are, just coming towards the end of the session. Little bit of a recovery, but not huge as we expected. So it's hardly gone very far, and really just stayed within that range. Just have a quick look on the multiple time frames. There's something else. Where were we? Oh yeah, over on the stocks, got Apple over here. That was going down nicely. A little bit of reversal coming on that one too. So markets are just kind of recovering from the news. You know, it's what you expect to see. Let's just go and check on copper. See what's going on with copper. That's been a nice. Let's put that one up full size. There we go. We read about this one back here. Nice. There's some, and again, it comes back to this issue with VPA where you get the signals, but it doesn't always. It's not going to reverse instantly, as Anna said. It's the oil tanker scenario, which we've used many times as an analogy of this, because when a market's moving, it's got momentum. That momentum is sufficient for it to carry on, and for the market makers or the big operators to turn a market is going to take effort. It's not necessarily going to happen off one candle. This was copper. You know, we saw it, a lot of volume going in, similar volume going in, starting to weaken a little bit. Then we get these two great classic candles, nice volume under there, starts to roll over, and we've come all the way back down to the volume point of control. Looks as though we may be going further on still. So VPA applies whatever time frame you're using it, whether it's on a 1 minute chart or a daily chart, it doesn't matter. The principles are exactly the same. You know, we've got a volatility trigger down here. This is on the 10-minute chart. We had a volatility candle here, ton of volume coming in. What are we expecting? One of two things, either a full-blown reversal or at the very least congestion to follow. If you're short this market, and maybe you got in short up here somewhere and you've benefited, you've got a really rapid move, I always say close out, take your profit off the table. Unless you're trading multiples, if you're trading multiple contracts, if you've got 5 contracts, take 4 off and leave 1 to run. You don't want to sit through this stuff. If it carries on plunging straight through, fine. What have you lost? You've closed out and you jump back in again. Maybe you've lost a slice in here. So what? It's nothing. You don't want to sit through this stuff. This is painful. It's very tiring. It's emotionally draining. You don't want to sit through it. So if you're in a position and you get a snap move and it works in your favor, close out, take your profit off the table, sit tight, wait for something to happen. Once it starts to move away from that particular candle, as it did in here, we got another one. Then we got another one. Volume confirms. We've got decent buying coming in under this one because we've got a wick to the lower body, so we know we're going to see a retracement of some description. But again, we're seeing congestion develop, you know, more painful for those sitting through it, etc., etc. So when you get the volatility triggers, just, you know, they're not going to be 100%, but I can guarantee you that 8 or 9 times out of 10, they will trigger either a reversal or they will at the very least trigger congestion. And you've got some up here. I can see on the, I think on the 1 minute there, on the 1 minute candle, exactly the same. This one, okay, we had a trigger, but it just carried on through, no problem. Then we had even more volume appearing on that next one, a huge amount of volume. So you know the big operators are in there, they have to be. And then we've got the reversal coming, and it reverses all the way back up to the V-part. We've got another little one here into congestion. We've got another little one here to the upside, so we've got more congestion here. But then we're at the volume point of control anyway, so we're not expecting it to move very far from there. And volume will always confirm. When you see things like this, volatility with huge volume, they're just confirming that the big operators or the market makers are actually participating within that particular move. Sorry, let me just get rid of that. There we go. So that's where we are. Let's just very quickly run over time. Apologies about that. Just very quickly run over to where you find all the bits and pieces. This is where you'll find all the software, quantumtrading.com, MT45, Ninjatrader 7.8, TradingView, and TradeStation. As Anna said, every platform has slightly different variant of indicators, but when you invest in the full package with us, one of the things you get, which we've done from day one, is you get all future indicators free of charge. So those customers who've been with us for 8, 9, 10 years, they will have benefited hugely because they gave us the seal of approval, if you will, and it's our way of saying thank you to you as a customer. It doesn't have to say you invest in the full package. We have thousands of customers who just bought 1 or 2 indicators. But the one thing that applies universally is whatever money you've spent with us, if you want to upgrade, say you've got 1 indicator, you want to upgrade to a package, or you want to upgrade to a bundle or a full package, or you want to upgrade to the education program, you will always get a credit for whatever you spent with us. It doesn't matter if you spent it 4, 5, 6 years ago. We have it on the system. We will always credit you in that way. We've rolled out of TradingView. There's a huge number of indicators on there. We've got the cryptocurrency strength indicator. We've got a radar panel that we built on there. We're now working flat out on Ninjatrader at the moment, both 8 and 7, to develop, really to go back to what I was saying about how you filter particularly stocks. We're developing the indicators to be available on Market Analyzer, which we haven't done before. So if you have the full package of indicators for Ninjatrader bought previously, then you'll get obviously all those upgrades as well, free of charge. Sorry, that's the VPA chat room going off. Someone in there. So that's where we're working on at the moment. We're going to be on Ninjatrader for the next few months. So that's primarily where our focus is. And what we're trying to do at the same time, simultaneously, is we are updating the indicators. We are adding features which are available on other platforms. And they will be rolled through, and we'll do the same on MT45. So we're basically kind of working this way now across the screen, if you like, coming out of TradeStation. We've done TradingView, and we're now into Ninjatrader, and then we'll be back on MT45. So that's where you'll find all the indicators. This is where you'll find the education program over at quantumtradingeducation.com for Forex. We have a lot of stock traders on this program now, and I know it's called the Forex trading program. And it is slightly counterintuitive, but Forex, it sits at the heart of the market. And the reason it sits at the heart of the market is very simple when you think about it logically, because if assets are constantly being swapped from one to another, if you're moving from a high risk asset to a low risk asset or vice versa, at some point in that transaction, you've got to go to cash. That asset has to be sold, you receive cash, you then take that cash and you buy something else. And that is why the Forex market sits at the heart of it all, because it is the cash gateway, if you like, of the world. And increasingly, stock traders are starting to understand this. We have a lot of stock traders on the program now. And as Anna said, the yen inextricably linked with risk, the dollar inextricably linked with risk, the same with the Swiss franc. If you want to know what's going on in the Forex market, go and have a look at the index market, because it'll tell you, and vice versa. It's all of these things that we cover in there, and they're all, it's a huge program. It's massive. There's 450 plus lessons. There's 250 to 300 hours of video. And of course, it includes all the tools and indicators as well, plus the VPA room, which keeps popping up there with someone in there, supported by Anna and myself. We've also got the funded program. You can trade up to $2 million of our money. We have a whole host of students on that, and the reason we bolted that on last year was to allow students on the Forex program to actually have an upgrade path to put that knowledge that they've learned to good use and trade our money with no risk to themselves. Finally, over on Anna's site, annacooling.com, this is where you'll find all the books, all up on Amazon in both Kindle and paperback. They do sell very well. We have some wonderful comments up there, thousands of 5-star reviews up there on them. And they continue to remain up, very high ranking in the Amazon catalog. So we are very humble and very appreciative of that as well. And you'll find all the links to the sites here as well. And you've got all the box sets down here also in Kindle. And the post down here, that was Tesla, which I think we did this morning, and we will post up there regularly as well. So thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back, as Anna said, tomorrow morning on the Forex session at 7:45 our time. So thanks for coming. Enjoy the rest of the trading session, what's left of it, and we will see you tomorrow bright and early. So bye for now.